Goldman today says NVIDIA earnings could set off another tech-led pullback. Any weakness in revenues or margins is likely to generate a setback in that space. We still have, you may not have the ultimate answer about whether the hundreds of billions you're laying out are going to come to reward you. And you may not get the answers for a while, but there are nearer term things that you need to see. Whatever pickup in revenues, you want to protect your margins. That's why NVIDIA, when we think we know a lot, we still need to see what they say.
Yeah, I think that the challenge here is that NVIDIA is both a beneficiary from this trade, but also a key cog in this trade. And so therefore, any sense of weakness in terms of NVIDIA's results are going to very materially spread through the rest of this ecosystem. We talked about vendor financing. You've mentioned it, Scott. You talk about the credit market. I think that what NVIDIA's earnings are likely to do, if they come even close to expectations, are likely to provide that foundation. But I don't think it necessarily alleviates some of these credit concerns. I think it merely kicks the can down the road a little bit on the equity side. I still think that going into 2026, you're going to continue to get some questions about the quality of the credit universe around technology because you haven't had to ask those questions at all. And I think that that's an important piece, is that NVIDIA will help steady this equity trade and likely catalyze some continued buying into the end of the year. But I think into 2026, we're going to be talking about this a lot more on the credit side than we are on the equity side.
NVIDIA is going to be so interesting, right? Because they are going to have a good quarter. That's never the question. Each of the last few quarters they've missed the whisper number. And so is the market going to make a stand and sell tech if they miss the whisper number, but yet earnings are still growing at 60% and they're all sold out for the next year or so? That's the weird thing about the market.
Well,
and that's why it's critical if you're a long-term holder not to get shaken out because NVIDIA trades down.
And what you're seeing in the stock, it's off 210. So you're already down about 10% going into
everything went up
everything,
on the OpenAI.
But what's interesting is sometimes when they run up before, then you have to be a little more, even more cautious.
Yep.
There is the issue of, and you're going to hear more about it because some of the biggest voices around the overstating earnings and depreciation issue, like Michael Burry's back again, and he's been on a nonstop storm of social media posts where he shows again a chart of CapEx and depreciation, and he has already teased November 25th. Something's coming down. Something's going down on November 25th. Is this issue to you much ado about nothing or what?
It's much ado about nothing.
The Chanos is talking about it too.
So you've got two short sellers looking at. Chanos is talking. I think he's really exclusively on
CoreWeave. On CoreWeave.
Oh, CoreWeave. Sorry, CoreWeave. CoreWeave. I don't understand why it went up. When right immediately pre-IPO, they had one customer. It's all debt. I've looked at shorting it, but I just don't short really anymore because that is built on debt. That's a mountain of debt.
I understand, like when you say, well, it's two short sellers, but if you do recall, there was a guy named David Einhorn who was asking some of the earliest questions about one of the investment banks.
I'm not dismissing.
You know what I'm saying? That ended up being the canary in the coal mine.
I'm not dismissing them. All I'm saying is what they're hanging on is not what I believe is critical to the performance of the shares, because these are two massive companies that generate. You've got to look at their coverage ratios, and their coverage ratios are coverage ratios that any company on the face of this earth would want to have. They're just monstrous. So until those coverage ratios fall down, until they go into junk status like Oracle, then I just don't. I think it's much about nothing. In terms of depreciation is a definite byline of what shorts look at. They're saying too much because it's accounting. So look, I just don't think there's really any there. So.
Well,
that's just my view.
There's a stock that's
broadly on CoreWeave there is, on Oracle. Yeah, I could see that, but on the others, no, I don't think so.
The NVIDIA report, the options implied move is roughly 7% up or down. The key is that more or less volatile than it has been historically? What does it tell you?
Believe it or not, hey Don, believe it or not, it's less volatile than we've been expecting over the last couple of years. Basically, what's happening is, NVIDIA has 80 to 90 analysts. It trades 3 million options a day. Everybody is looking at this. Any kind of unknowns or inefficiencies are kind of, traded out. So as we've gotten each successive quarter, as more eyeballs are on this print, the move in NVIDIA has actually been smaller. Now, that doesn't mean its impact on the broader market hasn't been smaller, but the actual NVIDIA moves are getting smaller. I would expect around 6 or 7% unless, it's a big surprise in one direction or another. And if it is a big surprise in one direction or another, that's going to be the way that the market trades into year end.
Chris, what exactly does the so-called skew tell you about what's happening with the options trade in NVIDIA right now? That is to say, the relative price of, options for call options to buy 10% away from the money versus 10% below the money for put options. How is that playing out right now? What does that tell you about sentiment?
We're seeing a lot more demand for upside in NVIDIA options compared to downside than we normally see. That might surprise some people with stock down, something like 10% over the last 2 weeks. But if you really think about it, people have gotten out of the stock, booked some profits, taken down some risk, but they don't forget about the stock. And if anything, they're looking to position for a potential rebound or show that they're willing to buy the dip through the options. So there's a lot more demand for upside in the options and a lot more supply or put selling on the downside. And because of that, we see a shift in what we call skew to the upside, much more so than we've seen in a while.
All right. How big are NVIDIA's earnings on Wednesday night?
It's a Super Bowl, not just for tech earnings, but I think this market, right? I mean, the reality is that there's only one godfather of AI, and that's Jensen. And NVIDIA, look, it's the foundation in terms of what demand looks like, in terms of what we're seeing. And, Gene and I talk about it often. I think it's going to be actually a huge positive growth catalyst that we see, not just for NVIDIA, but for tech stocks. But it all comes down to, on Wednesday night, you're going to be able to hear a pin drop on trading floors around the world.
I just don't know, Gene, how you even plan for this. Normally, you've got the analyst estimates, you've got a little bit of a whisper number. If they kind of come in a little bit above it, it's good news. Everybody knows NVIDIA's numbers are going to be gigantic. Is that a fair statement?
Yeah, it's not only a fair statement. Back on the 28th, Jensen went at the GTC. He basically gave us the playbook through the end of next year. He said this $500 billion in Blackwell and Rubin revenue. If you take that for his word that they're going to be able to do that, now if they can get supply, that implies a 54% revenue growth rate for next year. The street's at 41%. Now it's come up from 34 to 41, but that's the gap. As I think about this, Brian, that's the gap between where they've set the bar on the 28th.
He gave us 54% revenue growth. I don't know a lot about Wall Street, except I do know this. 54% ain't going to do it when it comes to the stock, is it? It's going to have to be better than 54%, isn't it?
I don't think it needs to be better than 54 this week. I think it needs to be better than the 41 where the street's at.
Yep. And to Gene's point, look, we just getting back from Asia, being there 3 weeks. Demand to supply for NVIDIA chips is 12 to 1. So it comes down to there's one chip.
12 people in an order for every one potential chip that exists to order.
So there's one chip in the world fueling the AI revolution. And that's why it speaks to our view that anyone that talks, and Gene and I talk about it all the time, anyone talks about an AI bubble here, we are in the third inning of where this is all playing out. And I think that's why this is an inflection point. You're going to see ultimately what the demand looks like from Jensen himself. And I view it as a bullish catalyst for tech stocks.
Here's the worry, though. Again, not a tech expert like you guys, but I do know also that technology changes. It evolves. And I think, Gene, if I was, now I guess I have to play the role of the bear-ish, right? Mm-hmm. If I was going to be the bear, I would say that what if somebody else comes out with a much better chip and all of a sudden NVIDIA's chips aren't as good as they are right now?
Well, I just don't think that's simply even in the equation, or at least over the next 6 quarters. But to your point, maybe 2-3 years down the road. And that's, I think, probably the biggest takeaway that your viewers should glean from this week is that we're still early in AI. Now, the companies that benefit from that will change over time. They'll kind of have 2-3 year chapters of growth rate. But I think that the undeniable truth here is that we have just scratched the surface in terms of where this is all going. And when I hear talk about Peter Thiel selling or SoftBank selling NVIDIA stock, I think it lands on something where they've made some money, but I think ultimately we're still so early, and there's going to be a lot of companies that are going to benefit from this over the next several years.
And I'd say, there's a better chance of me playing in the NFL than ultimately anyone bypassing NVIDIA's chip share.
I mean, don't disguise yourself, Dan. I mean, come on, you never know.
You never know in my 40s,
Yeah,
but you never know. But the reality is,
but why are you so not to take away from your NFL prospects? But why are you so confident that nobody at Lisa Su, AMD, all these great smart companies aren't going to come up with some kind of thing that will render NVIDIA's chips slightly less good than they are now?
4 to 5 years, they're ahead of, I think, anyone else in the market. Now, look, what AMD and Lisa Su are doing, they're definitely going to be major players, which is one of the reasons that we're very bullish on. Huawei will actually close the gap. But the reality is that everyone wants the NVIDIA chips because they continue to be, what I view is really, look, you take a step back here, you're creating a new economy. And obviously, G and I work on a number of projects around AI because the reality is this is just early on. It's the foundations NVIDIA. Second, third, fourth derivative, it's get out the popcorn. We're just starting.
Thing I worry about, clearly I worry about a lot of things, but I remember my colleague Deirdre Bose, a good friend, in January was talking about this DeepSeek and didn't get a lot of play. And then you wake up one morning, it was a Monday, I think, turned on the TV, CNBC futures were like down 1,000 points because suddenly people thought maybe China can do all this stuff with way less energy and less money, right? DeepSeek day markets quickly came back. Dan just mentioned Huawei, a Chinese company. Do you worry about China stealing NVIDIA's thunder and money?
Well, right now, if you look at that guidance, that 54% guidance that Jensen gave us back on October 28th, he said that that does not include, this is really important, it does not include any China business and also does not include them gaining any new sales for the next 5 quarters. And so the reality is that, is that a dynamic? Yes, the China piece is a dynamic. But look no further in terms of exactly what Dan was talking about, that for every one buyer, for every one that gets supplied, there's 12 that want it. That piece is, again, an undeniable truth around this, and I think just speaks to NVIDIA at the most basic level is going to grow faster for longer.
Isn't it amazing how Europe has screwed this up? I mean, aside from ASML, the Dutch company, which their lithography machines are needed to make some of these NVIDIA machines. So they're a player in this. But aside from that, they haven't, you never hear about AI and Europe. And I'm not picking on Europe, right? Except the fact that this is a global story that feels like, and if I'm going to take the bull side, Dan, feels like the US and NVIDIA and a few others have won the global game. Europe's not even involved. South America's not really involved. China to a point. But the global money, the global bets are on NVIDIA and the United States.
No doubt. And I'd say for the first time in 30 years, U.S. is ahead of China when it comes to tech. And it's not just NVIDIA. Look what's happening when it comes to software, Palantir, Microsoft, Oracle, cybersecurity, CrowdStrike, others. We see on authentication in the orb in terms of human proof. The reality is that it's U.S. and China and Europe. They're way behind because of the regulatory, and that continues to be.
They're investing in our companies because we're the winners.
Look, look, we talk about it all the time. This is a U.S.-China arms race, but guess what? First time, U.S. is ahead of China.
All right, I hope you're all doing well today and staying calm in this market. We just recently learned that Peter Thiel's fund sold its NVIDIA stake in the third quarter. This comes after SoftBank sold its entire NVIDIA stake as well. I'm just bringing this to your attention so that you're aware of it. It's worth noting that we don't know what Thiel plans to do with the capital, and so that is worth bearing in mind. Perhaps there is something else he needs the money for that we're not aware of. Also, SoftBank selling its stake in NVIDIA doesn't really concern me because SoftBank is going to invest the majority of that capital into OpenAI, and OpenAI is then going to use most of that capital to purchase more compute from NVIDIA. I wouldn't read too much into why certain investors sell their positions at any given moment. Most of the time, we don't know why they're selling, and perhaps they just need the money for something else. It's usually not a good idea to make investment or trading decisions based solely on how someone else is managing their own portfolios. Also today, we learned of a multi-billion-dollar bond sale by Amazon as the hyperscalers seek to speed up the build-out of AI infrastructure. It's important to note that the hyperscalers are primarily funding their AI investments by means of their own cash flows, and that is definitely the preferred method. That being said, when we start talking about debt, we need to ask ourselves, can the company afford afford to pay the debt? In the case of Amazon, the answer to that question is a resounding yes. And so this doesn't concern me at all. I just view it as Amazon speeding up their build out as they are seeing very strong demand. Amazon leadership told us on their earnings call that they had $200 billion of backlog at the end of Q3 plus multiple large deals in Q4 that were yet to be announced. That is business on the books that Amazon has to deliver to their paying customers. AWS is seeing very strong AI demand, and I don't blame Amazon for taking on some debt to speed up the build out in order to meet that demand sooner. I would much prefer that a company like Amazon use debt rather than dilute shareholders to raise capital. And so I don't view this news as anything to be concerned about. Looking ahead, we have NVIDIA earnings this Wednesday, November 19th after market close. We're expecting revenue growth acceleration given NVIDIA's Q3 guidance and due to the swift production ramp of Blackwell Ultra. As a reminder, we were expecting Blackwell Ultra production to ramp substantially starting in September. And Foxconn just recently reported very strong earnings and guidance, saying that AI rack shipments increased 300% quarter over quarter and are expected to double in Q4. Foxconn's very strong report is a strong indication that Blackwell Ultra production has ramped substantially in a very short amount of time. That bodes well for NVIDIA. I also expect Jensen to talk about agentic AI on the earnings call, given his previous commentary. I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026. I also expect a key question on the earnings call to be the question about the useful life of a GPU, given Michael Burry's recent comments. In case you missed it, Michael Burry recently posted on X saying that hyperscalers are understating the depreciation of GPUs, and that by extending the useful life of those assets, they are artificially boosting earnings. I disagree with this analysis, as I've discussed in previous videos. In short, I disagree with the premise that the hyperscalers are claiming a longer useful life on the GPUs in order to artificially boost earnings. Rather, I think the hyperscalers have simply come to the realization that the useful life of the GPUs is longer than what they originally estimated due largely to two factors: NVIDIA's continuous improvement of older generation hardware through software, and second, a severe shortage of compute in the face of extremely strong AI demand. Since the world is compute-constrained, developers will use whatever compute they can get their hands on, including compute that under normal circumstances would be considered older generation. This extends the useful life of the hardware. Additionally, we have to consider inference. Real-time inference substantially increases the need for more compute, and the introduction of advanced reasoning models and real-time inference is something that Burry fails to mention in his post on X. It's not enough to simply train AI models. You then have to provide access to those models at scale through real-time inference. If we thought training required a lot of compute, what about real-time inference processing billions upon billions of tasks every single day? This drastically increases the need for more compute in a world that was already compute constrained, and thereby increases the useful life of the compute that is available. Now, if we eventually get to a point where the world is no longer compute constrained, then that changes things. But I honestly think we're at least 3 to 5 years away from something like that happening, if it happens at all. Jensen appears to agree with this time frame, given his commentary on the BG Squared podcast back in September. Also be prepared for November 25th. That's when Burry is revealing something else. I think he may be starting a blog, but I'm not sure. And Burry told us in his post to expect more detail about GPU depreciation and the hyperscalers supposedly overstating earnings. I would not be surprised if tech stocks, including stocks like NVIDIA and were to react negatively when that is released, even if Burry's analysis turns out to be incorrect. So be prepared for that, just in case on November 25th, we may see some volatility. Now going back to NVIDIA earnings. I expect Jensen will likely get some question regarding this graphic. He showed at GTC in October, saying NVIDIA has orders on the books for $500 billion of cumulative revenue from Blackwell and early ramps of Rubin through the end of 2026. I want to remind you all that this is cumulative revenue for both 2025 and 2026. Jensen was not saying that we're going to see $500 billion in just the next 5 quarters. He's saying that by the time we get to the end of those 5 quarters, NVIDIA is looking at $500 billion in cumulative revenue from Blackwell and Rubin. Cumulative is the key word here. There was some confusion about this topic online after Jensen's GTC keynote because many people online took Jensen's words in a Bloomberg interview out of context. In that interview, the interviewer assumed the $500 billion in revenue was over 6 financial quarters, and Jensen responded by saying, quote, 5 financial quarters. But again, he was talking about cumulative revenue over a 2-year period. He told us on stage that 6 million GPUs have already shipped. That would be about $150 billion. And that would mean we're looking at roughly $350 billion in Blackwell and Rubin revenue over the next 5 financial quarters. Add the $350 billion yet to ship to the $150 billion that is already shipped, and you get $500 billion or $500 billion in cumulative revenue. Now, let's talk about what to do ahead of earnings. I'm not a financial advisor, and so I cannot tell you what to do. That said, I will share some thoughts for you to consider that I think may be helpful to you. First, you need to have a clear understanding of what type of position this is. Is this a short-term trade, or is this a long-term investment that you intend to hold for multiple years? Once you know the answer to that question, the decision-making process becomes much easier. Short-term trades are a more complex situation. But if I'm a long-term investor, I would prefer to hold through earnings, go through the earnings report, listen to the earnings call, and take some time to process the results. And if nothing has fundamentally changed about the company in a negative way, and the company is still making great progress forward, then I have no reason to sell. It's that simple. Now, I do want to offer a word of caution when it comes to holding options through earnings. Typically right before NVIDIA earnings, volatility rises notably, juicing up options premiums. And then the day after NVIDIA reports earnings, volatility usually plummets, pulling down option premiums with it. This is what is known as implied volatility crush, or IV crush for short. An IV crush is no joke. And so for me personally, I don't want to hold any option position through earnings because the implied volatility crush after NVIDIA earnings is usually very substantial. Again, I'm not telling you what to do, and this is not financial advice. If you need help with your situation, feel free to reach out to a certified financial professional who can help you with your unique circumstance. While I expect NVIDIA to report great results, I don't know how market participants will react in the short term. But regardless of how the stock trades in the short term, I continue to be bullish on NVIDIA long term, and I seriously think this company still has plenty of runway ahead of it. The reality is that the world is severely compute constrained in the face of very strong AI demand, and that will likely continue for at least the next few years. Over the medium term, I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026. After that, I think the next major surge in compute demand will likely be fueled by physical AI. Physical AI is a massive long-term growth opportunity for NVIDIA, and I don't think it gets enough attention. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested, and NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack. Physical AI will fundamentally transform society, and NVIDIA stands to benefit massively. This is not getting enough attention right now, but I think it will get a lot of attention in 2026 and 2027. In addition to physical AI, NVIDIA has multiple other large long-term growth opportunities, including sovereign AI, enterprise AI, many AI-native startups, telecommunications, and 6G and quantum GPU supercomputing. Jensen believes that quantum computers will not replace classical systems, but that they will work together and complement each other. These additional opportunities in customer segments will increase the need for compute even further. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.